Good evening everyone, welcome to the official YouTube channel of JAIIB CIB English Medium. First of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So just let me know is audio and video both okay, are we good to go? Is everything okay? Just give me a thumbs up in the comment section or do write all okay so that we can start our session. So this is our second session, or I can say the second session regarding principles and practices of banking. Module B mini marathon we are going to discuss today. Good evening. Yes sir. So do let me know is everything okay? Should we continue? In the last class we have done with the module, we have done module A session or module A mini marathon. Today we are doing the module B mini marathon. Okay, all okay, thank you for confirming. So let's start with the first question. First of all, this is the module B, functions of banks, which covers your unit number 22 to unit number 41. These are the units that we have in the module B. Okay, so let's start with the first question. Acha, before moving forward to the first question, if you need a PDF of this particular session or any particular session regarding your PPB, AFM or RBWM upcoming exams, simply in the description you will find the link of virtual library in which all the PDFs of all the sessions will be available to you. Okay, so do make sure you check this particular link, and with this link you can get the PDF. Let's start with the first question, which is talking about as per the Stamped Act, a document executed in India shall be stamped dash only before execution, at any time but before filing the suit, within 30 days after execution, before or at the time of execution. So when we are talking about as per the Stamp Act, a document executed in India shall be stamped when? A, B, C or D. Do remember this is important, like the conditions of the stamp is important. Do remember all the condition which is given under the section your 18, 19, 17, 35. These all section talks about the stamp. Okay, good evening Santosh sir, good evening Yogesh sir. क्या करें समझ नहीं आ रहा है. Don't worry, just keep attending all the mini marathons, Maha Marathon, Maha Revision and all the special session. Like in the last days we cannot cover the whole syllabus, but in your revision batch you will be getting all those content which will be asked in the paper. So simply, I have told you yesterday also what you have to do in the last 1 week. Do not take a lot of stress. Do make sure you cover the revision batch classes, then all the mini marathons. Okay, cover all the mini marathons. Apart from that, cover your Maha Marathon plus your Maha Revision. Okay, and the last will be Chalisa session. So this is what you have to cover. Anna, this is what you have to cover. Only follow these sessions. This is important, है ना? In the last 1 week, not more than that can be done. Acha, apart from that, the one more thing is mock test. Do make sure you give the mock test and practice a lot of questions on the PPP. That's important. So let's continue. Answer is D and C. Two options are there. Okay. So right answer is before or at the time of execution. It means D will be the right answer. Before or at the time of execution, it is important that your document got stamped. Okay, so the conditions are here: stamping of document. The next aspect of documentation is stamping. So stamping is required for payment of applicable duty and evidences such payment have been made. So a document shall be stamped in accordance with the Indian Stamp Act as amended by the concerned state government. The Indian Stamp Act 1899 contains provisions regarding the instrument chargeable with duty, mode of using stamps, time of stamping instrument for the instrument executed in India and out of India. Okay, so when we talk about here that the first thing is stamping in India, we are saying that the next aspect of documentation comes after the proper form filling and everything, that is stamping. And stamping is actually required for the making payment of your applicable duties and evidences which actually are a payment having made. Okay, so first is section 17 talks about of the act, all instruments chargeable with duty and executed by a person in India shall be stamped before or at the time of execution, the first condition. Second, section 18 says of the act, every instrument other than a bill of exchange and promissory note which are chargeable with the duty executed out of India may be stamped within 3 months after it has been first received in India. So we are talking about in the section 18, we are saying what, that every instrument other than your bill of exchange and promissory note which are chargeable with the duty and executed out of India, they may be stamped within 3 months after it has been first received in India. But we are executing promissory note and bill of exchange. Section 19 says of the act, the first holder in India of any bill of exchange payable otherwise than on demand or promissory note drawn or made out of India shall affix thereto the proper stamp and cancel same before he present the same for acceptance or payment or endorse or transfer or otherwise negotiate the same. So the section 19 says that if the first holder is in India of any bill of exchange which is payable or otherwise, then one on the demand or promissory note which is drawn or made out of India, and they shall affix thereto the power of stamp and cancel the same before it is presented in the India for the same for acceptance of payment or for the purpose of transfer or otherwise. So it should be negotiate the same in the country. Okay, so section 19 says that it have to be, if it have been paid already, then you have to properly cancel the stamp and before presenting the same for the purpose of your payment or acceptance, whether it is a transfer or otherwise you are performing the transaction. Then section 35 of Act provides that any person shall not admit an instrument not duly stamped in evidence for any purpose. However, such instrument can be admitted in evidence on payment of duty with which the same is chargeable, or together with the penalty of 5 rupees or 10 times of the amount of your proper duty, whichever is higher. So simply the next point is saying section 35 says that the Act provides any person shall not admit an instrument which is not duly stamped in evidence for any purpose. So first it is important that if you are giving any document for the purpose of what? For the purpose of your evidence, it have to be stamped first. It have to be what? It have to be stamped first. So while the stamp paper for different values are made available by the government, these can be used for the purpose of stamping. And in case of pre-printed forms, adhesive stamps are required to be used, and section 12 says that for cancellation of adhesive stamps so that the same cannot be used again. So once your document have been utilized as an evidence, then after that you have to cancel the adhesive stamp so that nobody else can use it again. So any instrument bearing an adhesive stamp which has not been cancelled so that it cannot be used again shall be deemed to be unstamped here. Okay, so after completing the purpose of evidencing, we have to do what? We have to continuously, or we have to make it cancel so that it will not be utilized again by the person. Okay, so do remember the conditions related to stamping. Next we have, when will a loan be a NPA? So NPA stands for non-performing asset. So if we talk about a bank have assets and liabilities both. The assets are also divided into two categories, like first is your regular asset, or we can call it a standard asset. The first type of asset of a bank is a standard asset. Second is your non-performing asset, that is NPA. Okay, so standard asset covers your regular asset. First, it covers your regular asset in which a customer is regularly making the payment of loan recovery, like every installment will be paid on time by the person. And the second will be your stressed asset. In case of a stressed assets are actually creating a special mention account. So we have a special mention account 0, a special mention account 1, and a special mention account 2. The special mention account 0 covers 1 to 30 days payment. Special mention account 1 covers 31 to 60 days, and special mention account 2 covers 61 to 90. So after 90 days, right, after 90 days your loan goes to the NPA. Okay, after 90 days, the loan, if you have not repaid the installment or principal and interest amount, then it will be called as a NPA. Okay, so after how many days? After 90 days. So first is saying interest and or loan installment overdue for more than 90 days, correct. Account is out of order in case of overdraft or cash credit, but it is not defining for how many duration if we are talking about, so that will be 90 days. Okay, and bills remains overdue for more than 90 days in BP and BD, that is correct. Right answer is D. So right answer will be your D. All of the above, in all the cases NPA will be taken, the loan will become NPA. Only in case of agriculture. In all the other type of loan it will be 90 days, but in agriculture it will be 2 harvests. Okay, for agriculture it will be 2 harvest season. If it is a long crop, then 1 year maximum duration. If it is a short crop, then 6 months 2 duration will be given. Okay, like in the crop season, for short term crops 2 crop season will be taken, and for long term crop 1 crop season will be taken. So it will be maximum of 1 year. Okay, after that the loan will become NPA, which have been taken for the agriculture purpose. So do remember this types of assets also. And in NPA then we have a doubtful asset. First of all we have a substandard asset, second we have a doubtful asset, and the third one we will have a loss asset. Okay, so right answer is D. Now, to whom shall the provision of IBC 2016 apply? So, Insolvency and Bankruptcy Code 2016 apply to which of the following? Is it applied to corporate, other limited liability entities, personal guarantors, to corporate debtors, or the individuals and partnership firm? To whom it shall apply? A, B, C or D? IBC 2016. So IBC was introduced, still we had a lot of recovery laws, but still the IBC was introduced. So it was introduced for the faster resolution. We wanted to have a faster resolution of each and every NPAs, and that's why your IBC was introduced. So right answer here will be corporates, other limited liability entities, your personal guarantors, to corporate debtors, your individual and partnership. What will be the right answer? D and B, two options are coming. Okay, so right answer is actually your D. All will be covered. To all of them the provision of IBC will apply. So right answer we have is the D option. Okay, very good. You can see here, if we talk about this IBC, so IBC pertains to the matter related to insolvency, liquidation, voluntary liquidation or bankruptcy of any entity or individual. These cases will go to the IBC. Apart from that, the provision of IBC apply to any company incorporated under the Companies Act or under any previous law. Second, any other company governed by any special act for the time being in force, except is so far as said provision inconsistent with the provisions of such a special act. Third, any limited liability partnership under the LLP Act 2008. Then we have any other body incorporated under any law for the time being in force, as the central government may specify. Apart from that, your personal guarantors to corporate debtors, your partnership firm and proprietorship firm, individuals, other than those which are defined in the personal guarantors and corporate debtors. Okay, so these are the parties, or these are the categories on which your IBC provisions will apply. Okay, do remember all of them. Apart from that, there are pillars of IBC, that's important. It have been asked earlier also. So the institutional infrastructure under the IBC, it rests on the 4 pillars. The first, we have a Insolvency and Bankruptcy Board of India, the insolvency professional agencies, the insolvency professionals, the information utilities, and the last one is adjudicating authorities. So mainly there are pillars on which the institutional infrastructure under the IBC works on or rests on. So do remember these names: IBBI, IPA, IP, IU, and adjudicating authorities. These will be counted as a pillar of your IBC. Okay. Now next, a person promising to save another person from loss is called dash. And also let me know in this case what will be the banker customer relationship. what will be banker customer relationship. So if one person is promising to save the another one from the loss, that person is called what? Is it a indemnified? Is it a indemnifier? Is it a collecting banker or a paying banker? A, B, C or D? Okay, right answer will be your B. It is the indemnifier. It will be indemnifier. A person promising to save another from loss is called what? It is called the indemnifier. Okay. So first of all, if we talk about the relationship between a bank and a customer, so bank will be indemnified or bank will be called as an indemnity holder, and the customer will be an indemnifier because customer is promising to save the bank from the loss. Okay, so right answer will be B option, and you can see here it is the relationship between bank and customer in which bank will be called indemnified and bank will be called indemnified and indemnity holder, and the customer will be called the indemnified. So a contract by which one party promises to save the other from the loss which is caused to him by a conduct of promiser himself or the conduct of any other person is called a contract of indemnity. And the section 124 of Indian Contract Act 1872 defines this. In the banking, such relationship occurs in transaction of issue of duplicate demand draft, your fixed deposit receipt, etc. So whenever customer asks the bank to issue the duplicate draft, bank have to issue it. But before issuing the duplicate draft, bank will ask a customer to sign an indemnity bond, in which bank will include a clause that if something loss happens in the future because of this duplicate demand draft or duplicate fixed deposit receipt, the customer will bear the loss. That's an indemnity bond, and that's why customer becomes indemnifier here. Okay, so in these cases, the person awaiting the facility will compensate the other for any loss arising from the wrong or excess. Okay, next. Which of the following is the statement false? Which of the following statement is false here? The statement is talking about a deferred payment guarantee. So which statement you think is wrong here? First is saying that in a deferred payment guarantee, the guarantee is to ensure delivery of goods. Second is saying a deferred payment guarantee is mostly based on a primary contract between the buyer and the seller. Third is saying a deferred payment guarantee differs from other kinds of guarantee issued by banks as regards payment liability of the bank on invocation. Fourth is saying in a deferred payment guarantee, the bank's liability comes into existence only if all the instruments are not paid and not on the non-payment of any one installment by the customer. So which of the following is correct here? In case of a statement false about the deferred payment guarantee. So also this is the type of bank guarantee, and if we talk about the bank guarantee becomes active only in case of buyer defaults, then only the bank guarantee becomes active. And the deferred payment guarantee, if we talk about, this is the guarantee which actually allow the person to make the payments in the installment. Okay, that's the deferred payment guarantee we are talking about. So which statement is false here? A, B, C or D? Okay, so in a deferred payment guarantee, the guarantee is to ensure delivery of goods. No. Second, we have a deferred payment guarantee is mostly based on the primary contract between the buyer and the seller. No. Third is saying a deferred payment guarantee differs from the other kinds of guarantee issued by bank as regard payment liability of the bank on invocation. That's true. This is true statement. In a deferred payment guarantee, the bank's liability comes into existence only if all the installments are not paid and not on the non-payment of any one installment by the customer. Okay, what we are saying here, in case of deferred payment guarantee, we are saying the bank's liability comes into existence only if all the installments are not paid and not on the non-payment of any installment. No, this is wrong. If any one installment have not been paid, then also the bank's liability comes. So fourth one is also wrong. So first, second and fourth are wrong. So right answer will be C statement. The right answer will be your C statement, because fourth is saying only when the all installments have not been paid, then the liability of a bank will come. No, if any one have not been paid, then also it is the liability of a bank to make the payment. So right answer will be your C option. Okay. So deferred payment guarantee, under which the payments are made on deferred basis, it means installment basis. Suppose let's say a bank or customers were to import capital goods on a deferred payment credit. Okay, and where the price is to be paid in installment spread over a 5 year. The exporter will have to wait for the each installment to mature until the whole amount is paid. So in meantime, the chances of the importer going bankrupt or failing to pay may arise, like might be in the next 5 years the importer is not able to make the payment in the future. So to avoid such kind of situation, exporter can request the importer to obtain a guarantee that the payment in installment will be made to the exporter, and the importer would therefore approach his bank to guarantee the payments in the installment, and the guarantee of the bank advising exporter to of the timely payment of installment is called deferred payment, and it is another method of financing of a fixed assets. So we know that the duration of repayment is 5 years, and in that 5 year might be the party who have to make the payment is not capable of making the payment or face any loss or any kind of default or any kind of loss in their transaction. To secure exporter, the exporter will ask the importer to make the deferred payment guarantee from the bank, and it will guarantee the installment will be made paid to the exporter over a certain period of time. So that's where the deferred payment guarantee will be used, and it is kind of another method of financing the fixed assets. Okay, next. Next question is talking about here that we are saying ownership of goods can be transferred by endorsement and delivery of dash. Yes, in the third statement was talking about that the deferred payment guarantee differ from the other kinds of guarantee. It does differ, which is issued by the banks, because the regards the payment liability of the bank on invocation is not required. Like you do not have to go and every time request for the payment. It's a deferred payment guarantee. If the buyer is not making the payment, it's the liability of a bank to make the payment on behalf of the buyer. Right, so that's why it differs from the other kind of bank guarantees. And the right answer here will be C statement. Very good. Document of title of goods is also there. So ownership of goods can be transferred by endorsement and delivery of your documents of title of goods. So right answer is C. Now the scheduled commercial banks are expected to enlarge the credit to the priority sector and ensure that the priority sector advances constitute which of the following. So question is asking about scheduled commercial bank expected to enlarge the credit to the priority sector and ensure the priority sector advances constitute what? For the scheduled commercial bank, the target for scheduled commercial bank and foreign banks with 20 or more branches are same. With 20 or more branches are same. What percentage is it? A, B, C or D? Very good, it is 40%. And the right answer is 40%. For RRBs, regional rural banks, it is 75% of ANBC or COBE. For a small finance bank, it is 75%. If we talk about your foreign banks with less than 20 branches, they have 40%. So this is the total PSL target for these types of banks. Okay, and agriculture target is also same. Agriculture target is the same for all the banks, that is 18%, है ना? Agriculture target is same for all the banks, whether it is RRB, small finance bank, or your foreign bank, except foreign bank with less than 20 branches, है ना? It will not be applicable on them. It is 18%. Out of 18, 10% will go to the small and marginal farmer. This target is same for all except foreign banks that is that have less than 20 branches, as well as the target for micro enterprises. The target of micro enterprises is also same for all the banks, that is 7.5% of ANBC or COB, whichever is higher, and this is also applied to except the foreign banks which have less than 20 branches. Okay, so the agriculture target and the micro enterprises target is same for all the banks except for the bank who have except for the foreign banks who have less than 20 branches in the country. And if we talk about the weaker section target is your 12% for all the banks, but for RRB it is 15%. Only RRB have weaker section target of 15%, otherwise all the banks will have 12%. Okay. How to calculate ANBC? ANBC simply adjusted net bank credit, the remaining amount of like after making all the deposits and withdrawals and reserves, whatever amount of money bank is capable of managing to provide loans. So ANBC includes the loans plus the investment amount. So whatever amount bank have adjusted to provide as a loan, that will be loan or investment, but investment will exclude SLR securities. Investment will include XLR securities. So ANBC equals to your loans plus investment, and investment will exclude the SLR security because SLR securities covers under the reserves that bank have to maintain in the reserve ratio. So that's why we have to remove the SLR securities. But all the amount of loan bank is providing plus the investment bank is doing, that will be counted as an ANBC. Okay. Now, for urban cooperative banks, it is 75%. From March 2024, it became 75% for urban cooperative banks as well. Okay, so continue. So right answer is your B. Next, which of the following statement is true regarding the inward remittance limit and foreign inward remittance certificate requirement under the FAMA Foreign Exchange Management Act in India? So let me know the answer of this question. That is talking about true statement regarding the inward remittance limit, the foreign inward remittance certificate requirement under FAMA, Foreign Exchange Management Act. CEOBE stand for credit equivalent of off-balance sheet exposure. Okay, CEOBE stand for credit equivalent of off-balance sheet exposure. Which of the following is correct? First is saying FEMA specifies a strict limit on the amount of money that can be brought into India by NRI. Second, NRIs need to obtain a foreign inward remittance certificate for all types of remittance to India. Third is saying FEMA does not specify any limit for money being brought into India, and no FIRC is required for remittance by NRI to their relatives. Fourth is saying FIRC is mandatory for all remittances to India regardless of the purpose. So which statement is true? A, B, C or D? B is true, that is NRI need to obtain a foreign for all types of remittance. Okay. No, it is not required by them. Hana, it is not required by NRI. So right answer is actually your C option. That says that the FAMA does not specify any limit for money being brought into India and no FIRC is required for the remittance by NRIs to their relative. So right answer is actually your C option. Okay. So you can see here, if we talk about this limit, it is given to us in the chapter. So FAMA does not specify any limit for money being brought into India, and a reason for that could be to increase the foreign exchange inflow to the country. Why we are not asking for kind of reasons? We are not asking because, or we are not putting any kind of limit on the money being brought into India, because we want a foreign exchange inflow. So if you see the capital account transaction and current account transaction, the maximum transactions are fully convertible. Maximum transactions, है in the current account, the fully convertibility of rupees allowed. Why it have been done so that more and more capital will come to India. So when it comes to the inward remittance, money means the money will be transferred from abroad to India. It is allowed without any restrictions. Okay, so that's what we're talking about. A reason for that, because we want to increase the foreign exchange flow to the country, and one can freely remit any amount of money to India, either to his own account or to those of his relatives. So foreign inward remittance certificate is not required for the remittance to India by NRIs to their relatives, and however for remittance received for business purpose, FIRC is required to claim the tax concession. Okay, for business purposes you have to take the claims. For the tax concessions claim you need a FIRC, but if any NRI is transferring money to his or her relatives, then they do not need a certificate. So that's why the right answer of R will be C option, not B option. Okay, am I correct? No, B is not correct, Raghavendra sir. Reason, because it is saying for all types of remittances you need to obtain FIRC. No, for the business transaction only you need a FIRC, otherwise no. Okay, FIRC is foreign inward remittance certificate. So when the inward remittance happening to India, then the FIRC certificate is required. Like for what purpose, for what reason you are transferring your money to India. To know that, this certificate will be called. Now, concerning the management of self-help group, which of the following statement is accurate? We are talking about a management of self-help group. Which statement is accurate here? A, B, C or D? First is saying the group should have no fixed norms or code of conduct and should function on a case-by-case basis. Second is saying the group's corpus fund should strictly be invested in stock market or real estate. Third is saying the group's bank account is preferably maintained in an overseas bank to avail the international benefit. Fourth is saying that the management and decision-making process within the group should have significant participation from BPL families, and member from APL families should not be the office bearer. And the right answer will be, so it have been said that the BPL families should have their proper control on the management of their self-help groups. That's why the decision maker should come from the BPL families, and that's why your D answer is correct. Very good. Right answer is D. Okay, right statement is D option. Now, if we talk about the self-help group, a lot of questions have been asked from the self-help group, not only individually but in the day NRLM, day NULM self-help groups conditions are also asked in the earlier paper. So self-help group is a voluntary association of poor formed with the common goal of social and economic empowerment. Self-help group is simply a silent revolutionary concept that has taken place in the credit delivery system. Microfinance through the self-help group offers the best form of credit for reaching unreached and the underreached. Okay, So it become a better way to make it available to the persons who are not able to get the credit facility. And you can see many of these are weaknesses. So self-help group in development of poor through various benefits, like mobilizing resources of individual member for collective development. You are uplifting living condition of poor. It's creating savings habit among the members of self-help group. It mobilizing individual skills for the group interest, assisting members financially at the time of need. Also it help in the entrepreneurship development. It also identify the problems, analyze them, finding the solution in the group. And the last is organized training for skill development as well. All these are the self-help group in development of the poor through the various benefits. They are trying to develop the poor and trying to provide the better livelihood opportunity to the poor, or better employment opportunities and living opportunities to the poor people by making them linked to the self-help group. Now, forming of self-help group, if we talk about number of members, normally the self-help group should not exceed 20, otherwise the registration become compulsory. So up to 20 members should be there. If it increased to more than 20, the registration is required. So self-help group may consist 10 to 20%. In difficult areas like desert, hills, etc., it may have just 5 members. Okay. Then we have family income criteria. Generally, all members should belong to family below poverty line. If necessary, maximum 20%, and exceptionally up to 30% members can come from the above poverty line families. Okay. Subsidy eligibility, only BPL members will be eligible for subsidy, not the APL members will be eligible. Only BPL family members are eligible. Management of group, this is what the question was asking about. The BPL family must participate in the management and decision making. Not entirely in the hands of APL family it should go. Also, APL members not to be the office bearer. The office bearer should be from the BPL family only. This is the management of the group. Now, restrictions on the membership. You can see self-help group, not more than one member from the same family should come, and a person not be a member of more than one group. Okay, so in the self-help group, not more than one member from the same family should be a member of self-help group. And the second, a person not be a member of more than one group. Then we have a code of conduct. The group should devise group management norms to bind itself. Another code of conduct says that the group should devise their group management norms to bind itself. Apart from that, building corpus, it should build a corpus through regular savings contributed by the members. Like every member should be a participant of your group's contribution, like a regular contribution every member have to do in the self-help groups to create a corpus. Bank loan to members, corpus fund should be used to advance loan to members in the self-help group. Savings linked loan will be provided, and that is be 1:1 to 1:4. That's the limit of loan that the self-help group can take. Let's say we can say whatever savings amount, whatever money you have in the savings account, it's 4 times more loan can be given to you. Let's say, for example, in your savings account you have 100 rupees. You can take a 400 rupee loan. That's the ratio between your savings and loan have been given. But if there is certain self-help group which is matured, then it can be go beyond the 4 times limit. Okay. Now, bank account, to have a group's bank account, preferably in the service area, bank branch. Records we have, it should maintain simple basic records such as minutes book, attendance register, loan ledger, general ledger, cash book, bank passbook of the group, and individual membership passbook. These are the certain records that have to be maintained by the self-help group. Okay, so do remember all these conditions of your self-help group forming conditions. Remember them, very important. Now, when it comes to the self-help group bank linkage program, the self-help group can open the savings bank account, and when they are opening a savings bank account, the customer due diligence of all members are not required. Okay. So self-help group registered or unregistered which are engaged in promoting savings habit among their members, they are eligible to open the savings bank account with the banks. Okay. And lending to self-help group, that is 1:1 to 1:4. So they provide savings linked loan to the self-help group. And like whatever savings you have in the bank account, according to that the loan will be given to you. Okay, and if the matured self-help group is there, the limit can go on beyond this. Interest rate, the banks can decide the interest is as per the regulatory guidelines. Also, the service or processing charges, no service charge or inspection charge should be levied on loan up to 25,000 per member in case of eligible priority sector loan to self-help group and joint liability group. So if per member 25,000 loan is going, then no service charge or processing charge or inspection charge will be taken. If it goes beyond the 25,000 per member, then you have to take such kind of charges. Okay, next we have presence of defaulters in self-help groups. If a self-help group is not in default, some members being defaulters should not detract from financing the self-help group. Like the whole group is not a defaulter, but a certain member of the group is a defaulter. In that case, it should not detract from financing the self-help. Then the capacity building and training, banks to internationalize the self-help group linkage project and organize the exclusive short duration program for field level functionaries. Okay, apart from that, you can see monitoring and review of self-help group lending. The monitoring of self-help groups linkage program should be discussed at the SLBC and DCC meetings of a bank. Okay, so state level bank committee, or if we talk about the district central committee, there it should be discussed about the monitoring and review of self-help group lending. Apart from that, reporting to CIC. CIC is Credit Information Company, so credit information reporting should be done as prescribed by RBI. Okay, like if the customer or if the self-help group have not provided the loan, you have to inform that to the CIC. Okay, that's the conditions of self-help group bank linkage program given. Now let's move forward. Next question is talking about, do remember each and every condition of self-help group. They can ask in the statement based question, or they can ask as a one-liner question for about your self-help group limits or something. Which among the following are correct appropriate characteristic of a company? Which among the following are the correct and appropriate characteristics of a company? A, B, C or D? First is saying the shares of joint stock companies are freely transferable. Second is saying change in its member can dissolve the company. Third is saying a company limited by guarantee the member are liable only to the extent of the amount guaranteed when the company goes into liquidation. Fourth is saying the corporation in law is equal to a natural person and has a legal entity of its own. Which of the following is correct? Previous year question after this JAIIB October ends, like after your RBWM paper ends, we will have a previous year questions discussion. Okay, Ayush sir? Now let me know the answer of this question. Correct or appropriate characteristic of a company? See, everyone is saying that is first, second and fourth. Okay, what about rest? Okay, done. So right answer is actually your first one. The share of a joint stock company are freely transferable. The change in its member can dissolve the company. No, it cannot dissolve the company. For a company limited by guarantee, the member are liable only to the extent of amount guaranteed when the company goes into liquidation. That's true. And the corporation in law is equal to a natural person and has a legal entity of its own. That's correct. So first, third and fourth are correct. Very good. These are the correct characteristics of a company. Right answer is C. Now the company's characteristic cover. Company is a voluntary association of person coming together to carry on business for profit. Second, it is perpetual existence. It has a perpetual existence. Change in its member does not affect its existence or identity. Only law can dissolve it. It's not like the member changed so the company will be dissolved. No, only law can dissolve the company. The share of joint stock company are freely transferable. The shares on the joint stock company, if we talk about, it can be freely transferable from one person to another. Like you can perform the trading of it. For a private limited company, legal restriction apply on transferability of the shares. A member can dispose shares as per his choice, subject to the regulation of the company. Then shareholders' liability is limited to the nominal value of the shares held, and a shareholder is not required to pay more than the unpaid value of his shares. So for a company limited by guarantee, the members are liable only to the extent of the amount guaranteed when the company goes into the liquidation. Apart from that, a company is entitled to own and hold the property in its own name, and a company can sue and be sued in its own name. Okay, these all are the characteristics of a company. Next, which among the following is our correct appropriate feature of a set off? Correct and appropriate feature of a set off. A, B, C or D? First is saying the credit balance in the partner's account cannot be set off against the debit balance of a partnership account. Second is saying a banker can set off a debt due to him upon a loan account repayable on demand. Third, a debt acquiring the due cannot be set off against the debt already due. Fourth is saying the credit balance in the current account cannot be set off against a contingent liability of a bill discounting but not yet due. So what are the correct features of set off? Like in which case the set off can be done? A, B, C or D? Let me know which of the following conditions are correct here. A is there, that is second and third. Okay. First one is correct. First is saying that the credit balance in partner's account cannot be set off. Credit balance in the partner's account cannot be set off against the debit balance of a partnership account. Okay, so right answer is your, if we talk about the statement number 1 that says the credit balance in the partner's account cannot be set off, this is wrong. Second is saying that a banker can set off a debt due to him upon a loan account repayable on demand, that's also wrong. A debt acquiring due cannot be set off against or the debt already due, that's correct. And the credit balance in the current account cannot be set off against a contingent liability of a bill discounted but not yet due. If it is not yet due, you cannot make it for a set of conditions. So right answer will be your third and fourth. Right answer will be your B option, that is third and fourth. Okay, so you can see here in case of set offs features, first is saying it is a statutory right and can also arise out of an agreement between the parties. Then it is an ongoing situation, like the right of set off can exercise by a banker by serving a reasonable notice on the customer. Then there should be no agreement between the bank and customer to exclude the right of set off. Also there should be a mutual debts, and debts should be for certain sums while the claim and the cross claim should be for a certain sums. And the claim and cross claim should be both for determined accounts or amounts where the customer has stood as a guarantor to another party. His credit balance cannot be set off against the borrowers due till the guarantee amount is determined. Okay. Also, for the purpose of set off, all the branches of a bank are considered as a single entity. They will be considered as what? They will be considered as a single entity. So this is what the conditions we are having in case of your set off features. So simply set off can be done when the loan is due and the amount is actually matching the amount which is available to a customer's loan account. Okay. Contingent liability means a liability which might occur or like which may or may not occur in the future. A kind of obligation, है ना? It's a kind of potential obligation which may or may not occur in the future. है ना? Like a chances of liability it will be created in the future, but depends if that happens, it may or may not happens. Next. Apart from this, the set off can be the another features are there. The set off can be applied only to those debt which are due and recoverable on the date of exercising the set off. The set off cannot be applied in respect of debt that are contingent and not yet due. Then indebtedness should arise in the same right where the bank has noticed the amount in the customer account is held under trust. The bank cannot exercise the right over this amount against the debit balance on another account of the customer. Also a deceased credit account and a customer's debit account cannot be combined. Also, automatic right of set off arises in these conditions, like in case of death or insanity or insolvency of a customer, in case of insolvency of a partner or on the winding up of a company, in case of receipt of a garnishee order received, receipt of notice of assignment of customer's credit balance received, or we can say receipt of a notice of secured mortgage over the security charged to the bank. So if any of these conditions happens in the customer's account, है ना, in that case you can we can say automatic right of set off can be done. So the account of a sole proprietor and his individual account cannot be combined, and the right of set off is available to the banker only in respect of a credit balance held in customer's account. In that case only right of set off will be applied to the customer's account. Okay, now next. Simple mortgage is created by what? Simple mortgage is created by what? The unwritten promises, an oral assent, an oral agreement, an instrument in writing. So in case of simple mortgage, it will be created by okay. 1 second. So simple mortgage will be created by what? By an instrument in writing. Simply, right answer is D. So simple mortgage can be created by what? An instrument in writing. Then we have, which of the following are the features of simple mortgage are as follows. The feature of simple mortgage. First is saying the mortgage has no power to sell the property. The mortgagee has no power to sell the property without the intervention of the court. The mortgagee is not put in possession of the property. Registration is mandatory if the principal amount secured is 100 and above. The mortgage has no right to get any payments out of the rents and the produce of the mortgage to property. So which of the following are the main feature of a simple mortgage? A, B, C or D? Okay, so A and D. So first is saying that the mortgagee has no power to sell the property without intervention of court. That's correct. The mortgagee is not put in possession of the property, correct. Registration is mandatory if the principal amount secured is 100 and above. That's also correct. The mortgagee has no right to get any payment out of the rents and produce of the mortgage property. That's also correct. Right answer is D. Very good. All the statements are correct, so right answer will be your D. You can see here, if we talk about the simple mortgage, so according to section 558B of the Transfer of Property Act, a simple mortgage is a transaction whereby without delivering possession of mortgaged property, the mortgager binds himself personally to pay the mortgage money and agrees expressively or impliedly that in the event of his failing to pay according to his contract, the mortgagee shall have a right to cause the mortgage property to be sold by a decree of the court in a suit, and proceeds of sale to be applied so far as may be necessary in the payment of the mortgage money. So simply the customer have promised, the customer have said that if I will be unable to repay the loan, then this property can be used by the mortgagee to recover the loan. That's a simple mortgage. Okay, now essential of a simple mortgage is what? The essential elements of simple mortgage are: the mortgager does not deliver possession of the mortgage property to the mortgage. So possession remains with the customer, but the documents title will be given to the bank. The mortgager binds himself personally to pay the mortgage money. So let's say, for example, I am the person who have taken a loan on a mortgage. So I bind myself that I have to pay the money of this particular loan. If the mortgager agrees that in the event of his failing to pay according to his contract, the mortgagee shall have a right to get the mortgage property sold and recovered. So I am promising, like, if I won't be able to repay your loan amount, then you can sell this property and recover your money. Okay. Then features of simple mortgage. The main feature of simple mortgage is the mortgage has no power to sell the property without intervention of the court. You need to take the court intervention, like court should be involved in this process. In case there is shortfall in the amount recovered even after sale of the mortgage property, the mortgager continues personally liable for the shortfall. And let's say the property have been auctioned, but the loan amount have not been recovered, then the mortgager, the person who have taken a loan, will be liable to make the repayment of the remaining amount of money. The mortgagee has no right to get any payment out of the rents and produce of the mortgage property. Okay, the bank is not eligible or not able to get the payment of out of the rents and produce of any kind of mortgage property. Then the mortgagee is not put in possession of the property. Okay, the possession remains with the mortgager only, and the registration is mandatory if the principal amount is secured is 100 and above. Okay, so these are the features of simple mortgage. Next, which of the following charges do not require registration with any authority? Which of the following charges do not require registration with any authority? D, everyone is going with? Done. So the guarantee arising due to the operation of law, hundi, which is a negotiable instrument, all of the above. They do not require registration by any authority or with any authority. Now, which of the following are the merits of an equitable? Now we have to find out the merits of an equitable mortgage. What are the merits of an equitable mortgage? First is saying that covers the borrower saves the registration charges, it involves minimum formalities. Second, it takes less time and can be conveniently created, and it can be done without much publicity, and therefore the customer position is not exposed to the public. So which of the following are the merits of equitable mortgage? And the right answer is all of the above. All are the merits of equitable mortgage. So you can see here the merits of equitable mortgage covers the borrower saves the registration charges, it involves minimum formalities, it takes less time and can be conveniently created, it can be done without much publicity, and therefore the customer position is not exposed to the public gaze or in the public eye. Then we have a demerits also. What are the demerit? In case of default, the remedy is to be obtain a decree for sale of property. Since this involves going to the court, it is expensive and time consuming. So the shortcoming can be overcome by inserting a convenient by which the mortgagee is given the power of sale. In that case, the mortgage deed must be properly stamped and registered, and the mortgage loses the advantage of being simple in procedure and less expensive. So this is the disadvantage. Like in case of default happen, the remedy is to be obtain a decree for the sale of the property, and this actually involves going to the court, which is expensive and also time consuming. You do not know when the court orders will be coming, so expensive, time consuming it is. Overall, it insert a convenient by which the mortgagee is given the power to of the sale of the particular mortgage deed, but it must be properly stamped and registered, and the mortgage loses the advantage of being simple in the procedure, and also it is less expensive. Now, where the borrower is holding the title deeds in his capacity as a trustee, equitable mortgage of the same is affected, and the claim of the beneficiary under the trust will be prevail over any equitable mortgage. So therefore, the banker has to make a proper synchronity of the title deeds before accepting them as a security. So equitable mortgage have benefits and demerits, or the disadvantage, we can say both. Now, if we talk about the features of your equitable mortgage, so essential features of mortgage by deposit of title deeds, which is also known as equitable mortgage. First, the mortgager delivers to a creditor or his agent the documents of title to the immovable property. Second, with intent to create a security thereon. Why it is transferring, or why it is giving this document, why it is delivering the creditor the documents? Because to create a security on it. The delivery of document of title is done in a town as specified by the state government. However, the territorial restriction refers to the place where the title deeds are delivered and not to the situation of the property mortgage. So the property given as a mortgage may or may not be situated in the notified towns which have been defined. So simply, to create the mortgage, there must be 3 ingredients which is required: a debt, a deposit of title deed, and an intention that the deed shall act as a security. So if you want to create this equitable mortgage, 3 ingredients are required. First, a person have to be taken a loan, like a debt is required. Second, deposit of title deed, you have to deposit the documents of your mortgage. And then third, the intention that you want the deeds to act as a security for that particular loan you have taken. Okay, so these are the essential features of your equitable mortgage. Next, the essential features of English mortgage. What are the essential features of English mortgage? The features of English mortgage. First is saying the mortgagor binds himself personally to repay the mortgage money on a certain date in spite of absolute transfer of property. Second is saying there is absolute transfer of property in favor of the mortgagee. Third is saying the transfer is subject to a condition that the mortgagee will retransfer it to the mortgagor upon payment of the mortgage money. Fourth is saying the mortgagee can sue the mortgagor for the recovery of the money and can obtain a decree for the same. Which of the following is correct? All of the above is correct. All of the above are actually your features of English mortgage. So right answer is D. You can see here, according to section 58E of Transfer of Property Act, English mortgage is a transaction in which mortgagor binds himself to repay the mortgage money on a certain date and transfer the mortgage property absolutely to the mortgagee, but subject to the provision that he will retransfer it to the mortgagor upon the payment of the mortgage money. So it says that the mortgagor will do what? Mortgagee will do what? Will retransfer the property to the mortgagor when he repay the whole amount of money to you. Okay, on that condition you are giving the property to the mortgagee. The features we have: the mortgagor binds himself personally to repay the mortgage money on a certain date in spite of absolute transfer of property. Also, there is an absolute transfer of property in favor of the mortgagee. The transfer is subject to the condition that the mortgagee will retransfer it to the mortgagor when the mortgagor repay the mortgage money to you. And the mortgagee can sue the mortgagor for the recovery of the money and can obtain a decree for the same. So these are what? These are the essential features of your English mortgage. Okay. Now, which of the following are correct about the difference between the pledge and hypothecation? Both are the collateral, both are used as a collateral and security. They have a difference of possession. What kind of difference they have? They have a difference of possession. So let me know which of the following is correct. A, B, C or D? So right answer will be your B, C and D. Three options are coming. So first is saying a pledge is a contract between the borrower and the lender, obviously, where the borrower offers an assets as a security to the lender. Second, the lender will have a legal possession of the pledged asset and the lender has the right to sell the assets in the event that the borrower is unable to meet his loan obligation. So when we talk about pledge and hypothecation, they both are your type of collateral, and the main difference between the two, in the pledge, possession will be given to the lender, but in hypothecation, possession remains with the borrower. That's the main difference between the two. So right answer is C here. Very good, both is correct. Right answer is C. Okay, so you can see we have a pledge, hypothecation, mortgage, lien and assignment. These are the type of charge we create. So first type of security, pledge, hypothecation, lien, they all are movable. They all are movable. Okay, and the mortgage is immovable and assignment will be your actionable claims. The transfer of security we are talking about, pledge, hypothecation, lien is movable, mortgage is immovable and assignment will be in a form of actionable claim. The possession in pledge remains with the lender. The possession in hypothecation remains with the borrower. The possession in mortgage usually remains with the borrower. Like maximum number of times it remains with the borrower, but sometime it can go to the lender as well. In lien it remains with lender. In assignment it remains with lender. Another possession have been defined. If we talk about the example, you can see the pledge example is gold loan. The gold you provide to the bank, so the possession goes to the bank in pledge. And in hypothecation vehicle loan, if you are taking a vehicle loan, the possession remains with the borrower only. I will be having a car with me myself and I will be using that vehicle, and bank will have a papers only. Okay, mortgage is a home loan, that's an immovable property. Lien can be any goods and services except your actionable claim in money, and the assignment will be your actionable claim, that's the LIC policy or book debts, where the bank have to go to the third party to recover its loan amount in case of default from the side of a borrower. Okay, so these are the conditions that have been that's different between the bank and between a pledge and a hypothecation. Okay, next. Now, identify the correct statement from the following about the MSME. Identify the correct statement about the following regarding MSME. A, B, C or D? Which of the following is correct? Also, let me know the definition of MSME. Like, what is the definition of micro, small and medium enterprise? At 8:30 we will end the class. Okay, so first is saying the Ministry of MSME came into being from 1999 to provide focused attention to the development and promotion of this year. The Small Industries Development Bank of India and Technology Development and Modernization Fund were created to extend the finance and technical service to the sector. The Delayed Payment Act 1993 was enacted to facilitate prompt payment of dues to MSME. So which of the following statement are correct? Again D, very good, all of the above is there. So right answer is D here. We can see the policy for small, tiny and village enterprises of August 1991 led this framework for the government support in the context of liberalization, which sought to replace the protection with competitiveness to infuse the more vitality growth of the MSME sector. So you can see the SIDBI, the Technology Development and Modernization Fund, they were created to accelerate the finance and technical services of the sector. So the Delayed Payment Act 1993 was enacted to facilitate your prompt payment of dues of your MSME. Okay. Apart from that, you can see the Ministry of MSME, it came into existence in 1999 to provide focused attention to the development and promotion of the micro small enterprises. And a credit linked capital subsidy scheme was launched by government to encourage the technology upgradation in MSME sector. Also, a credit guarantee scheme was started to provide collateral free loan to micro and small enterprise, and that was particularly first generation entrepreneurs. So in 2006, Micro Small Medium Enterprises Act came into play. Okay, now the definition of MSME, nobody have answered. We have discussed that in IEIFS subject as well. Now the definition have been changed in 2020 by Ministry of MSME. Okay, and the definition have been defined on the basis of investment in plants and machinery or equipment and the turnover. Two criteria are there. Micro, it includes investment does not exceed 1 crore and turnover does not exceed 5 crore. For small enterprises, investment does not exceed 10 crore and turnover does not exceed 50 crore. For medium enterprises, investment does not exceed 50 crores and turnover does not exceed the 250 crores. Okay, so on the basis of investment in plant and machinery or equipment as well as on the turnover, These are the two criteria on the basis of what Ministry of MSME have given us the definition of MSME in the year 2020. Also remember, now the definition of service units and manufacturing units both are same. Earlier it used to be the different definition, but now both are same. So apart from that, all the enterprises are required to register online and obtain the Udyam registration certificate, and all lenders may therefore obtain Udyam registration certificate from the entrepreneur. Okay, so this is what the classification of your micro, small, medium enterprises have been done. Next, what is the prescribed composition of beneficiaries under the universal social mobilization component of DAI NRLM? Very important question, very important scheme. Okay, do let me know what is the universal social mobilization component of DAI NRLM. $55 women, 25 SC/ST, 10 minorities, 5 person with disabilities. Second is saying 40 women, 35 SC/ST, 20 minorities, 10 person with disability. Third is saying 65% women, 20% SC/ST, 15% minorities, 5% with disability. D, 50% SC/ST, 15% minorities, 3% with disability. Which of the following is the right universal social mobilization component of your DAI NRLM scheme? Okay, so the right answer will be your D option. Very good. The right answer is D option. 50% SC/ST, 15 is your minorities, 3 is your person with disability. So right answer will be your D option. Okay, so you can see in case of DAI NRLM, this is National Rural Livelihood Mission, replaced the Swan Jayanti Gram Sarojkar Yojana, which was renamed as a DAI NRLM from 29th March 2016. The objective of DAI NRLM is to promote the poverty reduction through building a strong institution of poor. Second, enabling these institutions to access a range of financial services and livelihood services. Also, it promotes financial inclusion and strengthen the livelihood of a poor people. Then it complement the institutional platform with financial and capital services, production and productivity, which enhancement services, technology, knowledge, skills, inputs, market linkage will be there. Okay, and the universal social mobilization includes like at least one member from each identified rural poor household should come, which will be we are giving preference to the women, and it is brought under the self-help group network in a time bound manner. So subsequently both women and men would be organized here, and no poor would be left out of these institutions. And the composition defined 50% SC/ST, 15% minorities, and the 3% with the 3% person with disability. So this is how the composition created of the beneficiaries in the DAI NRLM scheme. Okay, next we have a base rate system question that we will be covering in the next classes. Like we are still having your mini Maha Marathon and Maha Revision. So the remaining questions we will discuss in that particular sessions of ours. Yes, apart from that, if you want the PDF of this particular session, you can go and check in the description. The link of your session have been given, sorry, the link of your description, in the description, the link for your virtual library is given, in which you will find the PDF of all the important sessions going on. Like the last session PDF is already uploaded here. Apart from that, do not forget to download the Adda 24/7 application, because by downloading Adda 24/7 application, you will be capable of getting the additional discount on all the running batches, all the upcoming batches on any product of your JAIIB, CIB. Additional discount will be available to you. So after downloading the application, simply go to the home page of the application where you have to select the exam category, that will be JAIIB CIB. Then go to the JAIIB October and you will find here the revision batches. This is the revision batch already started of AFM and PPB. Both are going at the same time, like at the same duration, and the RBWM will start once your AFM paper will end. And to enroll, use the code Y496 and apply. Once you apply, you will get here 77% discount. 1% additional discount will be available on under 24/7 application. Apart from that, do not forget to subscribe the channel JAIIB CIB English Medium, because this is the channel where you will find all the upcoming important sessions regarding your JAIIB exam. Okay, so that's all for today. Good luck with your preparation. Keep connecting, link yourself or keep connecting with our sessions on the channel of JAIIB CIB English Medium for your English medium sessions. And for bilingual sessions, you have an Officer Study 24/7 channel where you will find the bilingual session as well. Also, let me know in the comment section that how many answers you have given correct in today's session. And tomorrow again, we will meet with the module C and D mini marathon on the same channel of your JAIIB CIB English. Okay, so all the best for your preparation, and keep practicing more and more questions of your PPB from the mock test as well. Okay, thank you all for joining the session. See you all in